This is Matthew Cratter from Trader University, and today I want to answer the question, will Tether crash Bitcoin? I've been getting a lot of questions about this. Tether is actually the third largest cryptocurrency by market cap. It's just below Bitcoin and Ethereum. It's a strange kind of thing to count in the market cap simply because Tether is what's called a stable coin. It's a stable coin that's issued by Tether Limited, which is controlled by Bitfinex, which is a crypto exchange. And by stable coin, we mean that one Tether, one USDT is equal to $1 US. This was released by Tether. This shows what is backing the currency. What's very discouraging about this is, it looks like I can't draw in here, but the actual amount of cash backing Tether is very small, $1.2 billion. So let's look at percentages. About 3% is cash, another 2% is treasury bills, T-bills, which are basically as good as cash. You have some reverse repo notes, which were almost as good as cash. And then you have almost 50% of it in commercial paper. We're going to talk about what that is in a moment. Another 12% in secured loans, and then 10% in things that, looking at this, everyone knows that these things move around. Corporate bonds, their prices move around. Precious metals, their prices move around. And you have a full 10% of that backing Tether.
As the markets start to pivot upon themselves, going into the red, the dark red, with Bitcoin down 5.8%, Ethereum down 6.9%, and other coins following suit, with ADA just holding on in the green, going against the tide, I thought it was important that we go into one of the causes of what is happening in that background company. The company is dominating the financial news cycle lately because it's facing a record number of legal cases filed against it by contractors that it can't afford to pay. Time magazine estimates that 1.5 million customers could lose deposits on unbuilt Evergrande homes if the company collapses. Now, with $300 billion in liabilities and $100 billion in debt, Evergrande is at risk of defaulting and sending an economic shockwave around the world. So how does this all connect with crypto? Tether is the major stablecoin company that's no stranger to controversy. Initially, every USDT in existence was backed by a fiat dollar somewhere. But as we learn more about the company, we know this isn't the practice at all. The company's latest disclosure on how USDT derives its value goes as follows. Quote, all issued USDT are always 100% backed by Tether reserves, which include traditional currency and cash equivalents, and from time to time may include other assets and receivables from loans made by Tether to third parties. End quote. In other words, Tether is backed by a variety of things, not just US dollars, in a bank account. We know roughly half of this backing consists of short-term loans. No one knows for certain, but much of that is believed to be Chinese short-term loans. Tether has come out with a public statement that it holds no Evergrande commercial paper, but this is less than encouraging. Loads of Chinese businesses stand to get squashed here, and they definitely do have Evergrande exposure. We'd know more about what actually backs USDT if the company would allow an external audit, but such audits never seem to happen. In any case, there's clear potential for the dominoes to fall from the fiat world into the crypto world, and if a stablecoin the size of Tether suddenly can't make good on its transactions, it will tank the crypto market. Pause there before we go on. If you've been with my channel for a while, you know that I've always been concerned about Tether. I've been concerned about the fact that they've been, first of all, lying about it being backed one for one. We can see that it is not backed one for one. But more importantly, we can see that they were printing fake money to buy real digital gold. Just as the Federal Reserve prints fake money, fiat, to buy real gold, physical gold, evidently we had a repeat situation of a crypto Federal Reserve equivalent, that being Tether, printing fake money to buy real digital gold. Initially, I was concerned primarily about the crypto market crashing because of Tether's exploitation of its position to buy a truly scarce asset, that is Bitcoin, with their unlimited fake money, that is Tether. But as we can see from this insightful news piece, it in fact goes much bigger than crypto. It trickles over to the real estate world, which in itself is linked back into the crypto world. It's all intertwined. Reading on. FUD isn't limited to crypto. To be clear, that stands for fear, uncertainty, and doubt. No one knows yet if the Chinese government will save the day and bail out Evergrande, so investors around the world have been taking profits and generally triggering a sell-off avalanche. The global financial markets were blood red with losses as people did what they thought was necessary to protect their money this week. This includes crypto traders looking to lock in their gains, so the overall crypto market was down between 10 and 20% as the week kicked off, representing a total loss of around $250 billion in value. Just about any cryptocurrency you can name was showing a loss. From Bitcoin to Ethereum to Dogecoin, nothing was up.
Let's come back to the key point. Bitcoin's not a cryptocurrency. Bitcoin is a crypto property. It's digital property on a decentralized crypto network. Tether is a digital currency. You could almost call Tether a cryptocurrency. And it is much more akin to a decentralized, or it's a money market fund with light or no KYC AML, competing with other money market funds. If you're buying Tether, you're taking money market fund risk. I mean, the people that operate Tether, in theory, might invest your money into credit instruments that they default on. So you've got some kind of credit risk, like you invest in a centralized money market fund. And then you've got the regulatory question of, will the US Fed or the Treasury or the EU decide that Tether is violating, banking money transfer rules because it's on crypto rails? And those are the two risks you accept when you're buying Tether. Tether's one, it's the leading digital currency. There's DAI, there's Circle. I mean, there's a lot of other crypto, the digital currencies, and they compete with centralized currencies. When my company bought billions of dollars of Bitcoin, we never used Tether. We wired dollars into a bank and we bought Bitcoin. So all of the institutions that can wire dollars around the world will wire dollars or euros into an exchange. They will buy Bitcoin. And I could care less about Tether, right? It's a joke. People are like, well, what if Tether does? I don't care what Tether does. Tether is a money market fund. Tether failing concerns me no more than any other money market fund failing or any bank failing, right? If a bank has $50 billion in it and it fails, why doesn't that support Bitcoin, hurt Bitcoin? Well, in the near term, it might, right? In the near term, anything can create a crisis. But at the end of the day, the key is to understand that Tether is a digital currency, and it's really a money market fund, a decentralized money market fund in cyberspace. And Bitcoin is digital property in cyberspace. If you own 100 city blocks in New York City and some bank that has billions of dollars in New York goes bankrupt, do you care? Probably not. If you found out that someone used Tether to buy blocks in New York City, okay, well, hopefully they bought the Bitcoin before the Tether failed. If they didn't, then they have an issue. I really think that most of the Tether FUD is primarily being driven by other alternative stable coins or altcoins or someone else that has an agenda where they're hoping to replace Tether with their own altcoin. It's just competitive FUD that's spread because people can spread it. It's like if I ran a bank and you ran a bank and I wanted to create a run on your bank, I would say, I heard that Jamie's bank was not audited. So I'm hoping that they'll take money out of your bank and put it in my bank. And there's just a lot of that competitive maneuvering that goes on in the crypto industry, primarily because the crypto industry is not a security. So a lot of this stuff wouldn't happen if you were securities, because you have securities liability, civil and criminal liability for spreading those rumors. But in the crypto industry, it's unclear who the regulators are and whether or not you have any liability. So people say things more freely sometimes.
I would suspect that similar things happen throughout the cryptocurrency industry every day to many of the largest exchanges and corporations. Cryptocurrencies are still in the period of mass adoption and regulation, and as we start to transition more and more into this phase, the real use of cryptocurrency will start to be put to work. The industry is clouded by profits, so much so that cryptocurrency traders don't even hold their own funds, and end up trusting an entity that is likely even worse than their very own bank. This has been Crypto Advisor with the story of Tether, the virtual money printer.